All right, let's look at the different types of entry you can use to execute your trades in the market. The different types of entry you can use to execute your trades in the market. All right. For me, the types of entries I use, I'm going to quickly put us through them. I use what I call the confirmation entry. Then I also use what is called the refined zone entry. All right. I use confirmation entry. I use the refined zone entry. Now, not to take much of your time, confirmation entry is not anything too serious. It just simply means that when price hits your higher time frame POI, it gives you a certain type of pattern that allows you to know that okay, price hits your POI, price sweeps the last high of the POI on a lower. Of course, all these things are happening on the lower time frame. On the correlating time frame, it sweeps it and then it closes below. This is the classic confirmation. Whenever you see this in a higher time frame POI, whenever you see this pattern in a higher time frame POI, this is a classic confirmation. The next thing you do is either it gives you inducement, and then mitigates the supply and sells. It's either it does this, it could do this, which is fine, and it could also do this. You could also just do this, tap into your zone and then sell. All right. You could also do this. But if it's doing this, it could do something like this. These are different types of confirmation because we are going to go to the chart right now. You could do something like this. Come close to it, do a little bit of pullback. It becomes engineered liquidity. It taps into the zone and sells. You could do something like this. Different patterns for confirmation, but this is the first thing you're going to see. Once you see this, you now look for the liquidity. And this could also have liquidity before it even dumps. You could do something like this, taps into our zone, does something like this, clears it. On its way down, it will do something like this, drop inducement, sell, come back, and mitigate. These are different types of confirmation entry. These are different patterns of confirmation entry. This is inducement. Okay, it dropped inducement before it broke structure. There are some that will break structure, come back to drop inducement, and then break another structure, come back to pick it. There are some that will break structure, come back to a small pullback, engineer liquidity, and then pick it. All of them are valid. But once you see something like this, you have confirmed that zone is going to hold. Okay, this will now be your entry. Enter somewhere around here and sell. All right. So there are different confirmations. This is one of it. It could be something like this. It could be something like this. Let me see if I can do all of them together. We have another zone. We have another zone here. All these are the bearish scenario. These are supply zones. So it could be something like this. Price taps into the zone, does something like this, clears liquidity inside the zone, breaks structure, drops inducement, breaks structure, comes back, mitigates the lower time frame supply, and then break structure. This is a valid confirmation. This is a valid confirmation. They just have different types of inducement. This inducement happened before the structure break. This one happened after the structure break. And then the third type is the one we call engineered liquidity. I think I've drawn it before, where price breaks structure, comes back, drops a little bit of liquidity, engineer a little bit of liquidity without going down to break structure and then tap into our lower time frame PI. Let me see if I can also draw that one. Let's just pay attention. So this is our zone. Let's assume this is our zone. Let's assume this is our zone. Let me put it here. Let's assume that is our zone. Uh, engineer liquidity. It mitigates. It mitigates. Comes down. Clears it. Break structure. Gets back up. Engineers this liquidity. Taps our valid supply zone and then sells. This is another type of confirmation. This is a confirmation. This is a confirmation. This is a confirmation. Type 1, type 2, type 3. Type 1, type 2, type 3. These are the three types of confirmation. This place is a higher time frame POI. For me, I trade supply and demand zones. So in a bearish scenario, I'm trading from the supply zones. These are my higher time frame supply zones. It's not just random supply zones. Higher time frame correlating higher time frame supply zones. Correlating higher time frame supply zones. So I'm going to show you the time frame correlations so you know how to trade it. These are higher time frame supply zones. Once price hits into that supply zone on the higher time frame, you go to the correlating lower time frame and start looking for either of this pattern, looking for structure to form either this or this or this. Structure must form 1, 2, 3. All right, for confirmation, structure must form what? 1, 2, 3 for your confirmation. That is what the structure must do. It must form either this or this or this. Do you understand? It must form either this or this or this. Type 1, type 2, type 3. Anyhow, whatever you want to call it. This is how it works. All right. Price gets into your zone, mitigates it, sweeps it, drops inducement, and then clears the inducement, drops order in the lower time frame, and then we are selling. All right. So this is one. This is a break of structure right here. This was the sweep. This was the inducement. This one is inducement. All these things you should know them by now. But if you don't know them, pay good attention. You will learn it. So this one here is the break. This one here is the break. So three types of confirmation. This one here is the break. Three types of confirmation. The one that has inducement before it breaks structure. The one that breaks structure, drops inducement, and then breaks structure again before coming down to your entry. The one that breaks structure, come all the way down, drops an engineered liquidity. This inducement here does not break structure. It just drops it a little bit, does this pullback, mitigates your zone and sells. So type 1, type 2, type 3, whatever you want to call it, these are the different types of confirmation. In a valid zone, in a valid zone, what is a valid zone? A zone that broke structure. A valid supply zone, a valid demand zone. All right. I want to delete all this because I want us to go to the charts now. I'm deleting all this. Let's let's look at it in the market. All right. So that is for confirmation. I'm also going to talk about refined entry. I've given all the three types of confirmation. I'm also going to talk about refined entry. Now we can see the supply zone where market sold from and broke the structure. Remember, I said valid zone is a zone that did what? That broke structure. We can see the supply zone. We can see price was bearish here. From here, price was bearish. Got into a bearish structure. This is the daily time frame. This is a daily time frame. So we can see this bearish structure. Price is in a range. But inside of this range, we have a bearish structure. Price was coming from premium to discount. All right. So on that journey from premium to discount, we were breaking lower lows. We were breaking lower lows. Each time price breaks a lower low, it comes back to a valid supply. Supply that created that lower low. Supply that broke that lower low, and it continues that downwards movement. All right, look at the structure. Price was bullish until here, started selling. This one broke, came back up here. We broke down to this zone, and now we have come back up here. Most likely, we are going to sell down to this zone. Most likely, if we have to follow structure. So on the daily time frame, I just trade the last structural leg. I don't want to see the overall thing the market is doing. I just look at what is the current thing the market is doing on the daily. We are bearish for now. As an intraday trader, we are bearish, right? Even though price is stuck in this range, this high and this low, but in this range currently we are bearish because we have broken structure. That makes this zone a valid supply zone on the daily. And if you know anything about valid zones, if you know anything about valid zones, you will know that you will agree with me that let me let me show us something. Now for relating time frame, let me show us something. I want to quickly open this image I have here. Time frame correlation. Now, time frame correlation. When it comes to time frame correlation, you can see that we have the weekly correlates with the H4. The higher time frame weekly correlates with the 4 hour. If you are trading daily zones, you should be taking your confirmation on the hourly, on the 1 hour. If you are trading 4 hour zones, you should be taking your confirmations on the 15 minutes. If you are trading 1 hour zones, you should be taking your confirmation on the 5 minutes. If you are trading 15-minute zones, you should be taking your confirmation on the 1 minute. This is just how it correlates. This has been proven, this has been tested, this works. Okay, you could have whatever works for you, but this one works. Higher time frame zone, lower time frame for confirmation. Higher time frame zone, lower time frame for confirmation. So because we are trading that higher time frame zone we're looking at now, that supply zone we're looking at is daily. We're going to definitely get a confirmation on the hourly, on the 1 hour. We're going to get a confirmation on the what? On the 1 hour zone. So let's go back to our chart. Now we can mark this zone and make sure it appears on the 1 hour time frame. Now let's go to the hourly. We've seen our supply zone. What makes this zone a valid supply is that this zone broke structural low. It broke structure. This was the zone that market pushed with this momentum to take away this, to take out this last lower low. So let's go to the hourly. Now we can see all these things in the hour. Let me delete all these things. This was when I was marking it. We can see all these things in the hourly. If you look carefully, you will agree with me. What did market do? What confirmation did it give here? Market was buying, did this high, did this low, swept it around here, did this, but it did not break structure, so we couldn't confirm. Now did this and broke structure. Okay, immediately it broke structure to the downside from this zone, from this daily zone. This is a daily zone. Now it has broken structure to the downside, telling us that okay, we are ready to start selling. Now came back up here and it sold. Where's our liquidity? What sort of liquidity did it drop for us here? What sort of liquidity did it drop? If you look carefully, you will see that if I should go to a lower time frame, you will see there's a slight pullback here market did. Look at this pullback here. We'll use this as our liquidity. You can see that liquidity because you must be able to spot your inducement. Given the different types of inducement market does, sometimes it will not be structural inducement, it will be candle inducement, single candle inducement. This single candle was the pullback it did. When it started selling, it did a pullback here. If I can mark it, you will see something like this. Market did something like this, left this inducement here, and then broke structure. You understand? If I'm to mark it, you will see something like this. What we have is something like this. Swept liquidity, did this, This is what we have. This is what I have, which was one of the types of confirmation I just taught us now. Right, this confirmation after the sweep, market dropped inducement here before breaking structure, and that is what it happened. That was what happened here, even though it did that with a single candle. After market sold to this point, market had to buy back to this high before dumping to take out this structure low. So when market sold, it bought back to this high before dumping. So this is, you must train your eye to spot this. You must train your eye to spot, because you must account for inducement. If I ask you where's your inducement in this setup, you must account for it, because that is not the main move. The main move happens after the inducement. If you sold from here, market will take you out when it comes back. It will take you out and then do the main move. So the inducement is not the main move. Market does its main move after inducement. So this was the type of confirmation we got here. Remember, this is not the only type of confirmation. So you need to know the three types of confirmation market does in your zone. All right, you need to know the three types of confirmation market does in your zone. If you're able to know those three types of confirmation, it will help you. Okay, go back to this video, go back to the beginning of this video, mark them out and study them. All right, so this was the confirmation he did here. Immediately did this confirmation now in this daily zone. This is a daily zone, and we are now on the correlating time frame of that daily zone, which is the 1 hour candle. Now, immediately has done this, we can mark our zone. We can mark our zone, our valid supply. The supply zone on the 1 hour, this last candle. This was the candle that created the move that broke this structure low. You can see this lower, this 1 hour structure low here. This was That was where the momentum that broke the structure low came from. So that is a valid supply zone. I said a valid zone is a zone that broke structure. So this structure low was taken from this zone. This was the last candle that pushed price down. So that is our zone. But you can see that the inducement is inside the zone. So you're going to trade from after the inducement. This has already refined your zone, which is what I'm talking about. Refined zone entry. After the inducement, remember I talked about confirmation entry and refined zone entry. This 1 hour zone now, because the inducement is in part of the what? It's part of the zone. It's already inside the zone. If you mark this candle from week to week, the inducement is already inside the zone. We can decide to trade after the inducement. Some people will trade from the 50%. If you trade from the 50% of the zone, it's still a good refinement. If you trade from the 50% of the zone, it's still a good trade. You're going to get a good trade. Target the last structure low, one 4.6, 4.6. You're going to get a good trade, because now you have refined your zone. But if you want to really do good refining, if you want to really do a good refinement, all right, a good refinement, you go down to the correlating time frame of the hourly candle. Now you treat this hourly zone as the new higher time frame zone, and go down the time frame that correlates with the 1 hour. Time frame that correlates with the 1 hour is the 5 minutes candle, the 5 minutes time frame. Sorry. So I'm going to mark this, move it from the 1 hour. So this is our new zone. This zone, market has come into this zone, taught us and given us TP. But let's see if we can further refine it. Let's mark it on the 5 minutes. Let's mark that zone on the 5 minutes. Let's see what we did on the 5 minutes. Now remember, if you are doing refinement, zone refinement, you don't need to get confirmation pattern. You are just looking for the to refine the zone. You are not trading confirmations when you are trying to refine your zone. You are not trading confirmations when you're trying to refine your zone. If we come down to 5 minutes, we are not looking for any of our confirmation pattern. We are just looking to trade from the most refined zone. Okay, refining your zone just simply means to get the the best risk to reward from that trade. Now, when you look at this zone, you can see that the extreme supply in this 5 minutes time frame is this last candle here. That is our refined zone entry, because it was from that supply that we started breaking structural lows here. From this supply, we got momentum to start pushing, breaking the lows and all of that. This is the extreme of this range. This is the extreme premium of this range. Look at this range from this high to this low. That is the extreme premium. So we are going to trade from that valid supply. So we are going to remove this zone, leave it on the hourly, remove it from the 5 minutes, leave it on the hourly. Now we have, from the daily, we've been able to confirm our entry and still refine our entry. If you look at this carefully, we've been able to confirm our entry. Now you're not looking for any other inducement, blah 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 blah. You're not looking for all of that. We are just entering directly. And even if you want to look for inducement, this could serve as your inducement. Do you understand? This, even though this zone is a refined zone, it still follow our pattern of a valid confirmation entry. Structure did something like this, swept this high, came down, left the inducement, sold. Now coming back to clear the inducement and mitigate our valid supply. So you can see that even the confirmation pattern still holds. Even though we are not looking for extra confirmation, what we are looking for actually is, we are looking just to refine our 1 hour zone. We've already gotten confirmation on the 1 hour zone. Going down to the 5 minutes is just to refine it. Now you can see that this trade is giving us 1 is to 5.18 on the hourly. Even though we tried refining it on the hourly, we got 1 is to 4 point something. Our SL is above this last high, this high that did this week. We just put our SL over there, and market actually delivered on this. Peaked around 1:20 a.m. By 6:20 a.m., 5 hours later, we are on full profit of 5.18. All right. So you can see this is how you do your confirmation entry plus your refined zone entry. This is how you refine your zones. This is how you confirm your zones. All right. This trade happened in the midnight. Unfortunately, I did not take it, but I had that zone marked out on my daily time frame. I did not take it. I was sleeping. This was around 1:20 a.m. I was not awake, and this would have been a perfect trade because it met all criteria for my entry. There's a valid confirmation. There's alignment. There's agreement. There's time frame correlation. So anytime you see a setup like this, do not hesitate to execute it. Do not hesitate to execute this setup. You can trade only this setup and you are good for the rest of your life. Only this setup. Only this setup and you are good for the rest of your life. You could see how everything aligned from the daily to the 1 hour, from the 1 hour to the 5 minutes. You get a refined entry. You get 5R on this trade. By the time you're waking up in the morning, you are out on take profit. You put $1,000 to this, you're out on $5,108, which is very good reward. You put $100 to this, you're out on $518. Whatever you put on this, you're out on 5R. You're out on 5R, which would have been an amazing trade. All right, which would have been an amazing trade. Some people, another style of zone refinement is when you have a large candle. When you have a large candle, when you have a large candle with long wicks, when you have a large candle with long wicks, a large candle with long wicks, you can do 50% of the zone, irrespective of time frame. Irrespective of time frame, when you have a large body candle, long wicks, just a large candle, a long candle. Once you have a long candle, you can do 50% of that zone. Now, for instance, look at this 5 minutes time frame. You can see that our supply zone is a long candle with wicks, almost equal wicks to the top and to the bottom, large body size, and then it did this. Sometimes this works. Sometimes, if you want to be extremely refined, you can. take your entry from the 50% of that zone, because price will dig into that zone at least to liquidate it up to 50%. And you can see if you take your trade from the 50% of that zone, a 1 is to 5 trade becomes a 1 is to 9 trade. 50% of the zone is here. All right, this is an extra refinement. Extra refinement. You are refining it to the extreme. So you get a 1 is to 9 trade just by taking the trade from the 50%. This only works when the zone is large enough. You can see that this zone is actually large. All right. Even that hourly zone I showed you, we also took the trade from the 50%. If we go back to the hourly, you can see our hourly trade here. We took it from the 50%. We did not just take it from the 50% because inducement was inside the zone. We took it from the 50% also because this candle is large. It has long wicks, it has long body. If you look at it, you'll see what I mean. You can see that the wick is long. The zone is a large zone. If you're trading from a large zone, one of the ways to also refine your zone is to trade from the 50% of that zone. Some people trade from body close, candle open. So some people would take the entry from here, where the candle actually opened before it closed here. So people can trade from candle open for bearish scenarios, candle close for bullish scenarios. But I don't do that. I don't trade wicks. I don't trade candle opens and candle close. All right. I trade zones. But then I know how to refine my zones. I can enter this trade from the 50% on the hourly and I'll still catch this trade, which is what happened here. And it gave me a healthy 1 is to 4. All right. If I now refine it further to 5 minutes, which is what we can see here, which is what we can see here. Okay, which is what we can see here. You see how clean that trade is. All right, you can see how clean. This is a perfect A plus setup. Whenever you see a setup like this, do not hesitate to execute it. It could happen once in a week, it could happen twice in the week, it could happen once in 2 weeks. But whenever you see a setup like this and you are able to cash it, don't hesitate. If you are sleeping, that is different. If you are not in the market as of then, that is different. If you are busy with your life, busy with your work, that is different. But if you spot this and you are opportune to execute it, do not hesitate to execute it. Always execute it. Let's quickly do it again. And this is how top-down analysis looks like. All right. This is how top-down analysis looks like. Even though we are trading in a range, we can still catch setups. And you don't have to hold this setup all the way down here because you are in a range. You don't even know if it will get to that place. But you know that it will clear the structure low in the lower time frame. Have your valid zone, valid supply zone on the hourly. This is a valid supply zone. I've told you what a valid zone is, a zone that broke structure. And for me, my valid zone is the last indecision candle before an impulsive move away. This is our impulsive move away. You can see this massive bearish candle with so much momentum. You can see this sell all the way down here. And if you look at this candle, you can see that it's an indecision candle. Market bought, market sold, and it closed in the middle, almost where it opened from. So call it a doji indecision candle. The buyers and the sellers had equal strength on this particular day. On this particular day, Friday, 26th June 2026, the buyers and the sellers had equal strength. So after which the next day, the sellers dominated with so much momentum. That means we know that sellers are in charge of this market. This market is going to sell more, especially when it comes back to this zone. All right. So I mark my zones as the last candle before the massive move away. It could be bullish, it could be bearish. All right. So this is a bearish scenario, and this last candle was a bullish candle. This last candle could also be a bearish candle. I don't really look if it's a bullish candle or a bearish candle. I don't trade based on the last bullish candle before a bearish trade or the last bearish candle before a bullish trade. I trade the last candle before an impulsive move. For instance, now this zone, the demand zone here would have been this candle. But why this zone is not a valid demand to me, if you can guess right, you already know. It did not break structure. If this zone had pumped up and taken this high and cleared this high, that means it has invalidated this supply. I'll be waiting to buy when price comes back here. All right, because this is a last candle before this impulsive move away. You could see indecision, 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 and the market pumped up. All right, so that is how I mark my zones. The last candle before an impulsive move, before a massive push, there's enough momentum, there's enough imbalance. That's how I mark my zones. So when you mark your zone, and the zone must break structure, even if it's an internal structure, it has to break structure. All right, it has to break structure. So maybe this zone will be valid on a lower time frame. If I want to trade this zone, let's say on the 4 hours, if I'm to mark this zone, let me see what it looks like on the 4 hours. Okay, on the 1 hour. The 1 hour, is there any valid zone there that broke structure? We'll see that after I did that, it came back to mitigate all the imbalance before moving up. So there's no inefficiency here. There's no inefficiency here. The closest we'll have is this one. So it's just in a range. You could see this indecision, indecision, indecision before this push up. Although we can still observe it, but it's not an A plus setup. The A plus setup is you will see the break of structure clearly. You don't have to twist your tongue to validate that there was a break of structure here. If this candle has taken this high, if this structure, if the supply zone did not hold, it has taken this high. It would have been so clean. It would have been so clean. You understand? But it didn't do that. It's respecting the supply zone. So now we know what a valid zone is. This zone took out this low. I've, I've shown you the different types of confirmation we have, and the confirmation happens on the lower time frame. The lower time frame, the correlating lower time frame, is not random. The 1 day, the daily zones, your confirmation should be coming from the 1 hour time frame. So you look at the structure the 1 hour has printed, and then you look for either of those confirmations I have drawn. Okay, either of those confirmations I have drawn, always accounting for inducement and liquidity. Always accounting for inducement and liquidity. You look for either of those types of confirmation I have drawn, and then you trade it. You can trade directly from confirmations without having to refine. But as time goes on, you learn this thing, you get stronger. You can now start refining your zones. After getting the confirmation, you come to that time frame where you got your confirmation and trade the correlating time frame of that time frame. You get a confirmation on the 1 hour, you go down to the 5 minutes and refine the zone on the 5 minutes. Or if you don't want to do that one, you could just refine it 50%. Depends on how large that zone is. If the zone is large enough, you can refine it to the 50% and trade it. You can see that this daily zone was mitigated and then dumped. It did not mitigate up to 50% because this is our higher time frame zone. So you cannot refine the higher time frame zone. Higher time frame zone, what you are looking for in the higher time frame zone is confirmation. What you're looking for in the higher time frame zone is confirmation. On this daily zone, you don't want to trade directly from the daily zone and say, let me refine this or let me enter here and just sell. Where is your inducement? Where is your liquidity? All those things you cannot account for it. This is a higher time frame zone. In this higher time frame zone, you just want to see price mitigate that zone. And then you go to the correlating lower time frame and start looking for the confirmation. Once you get that confirmation, you can trade directly from that confirmation on the zone, even without refining it. But to increase your risk to reward, as time goes on, as you learn this thing better, you can then go down and refine the zone. And this way, this one setup can retire you for life. This is what I trade. This is the only thing I trade. I've shown you the different types of I've shown you the different types of confirmation. I've shown you the correlating time frames and the higher time frame and the correlating time frame. I've told you what a valid zone is. This is my entire trading strategy. This is the system I trade. Okay, it's now left for you to personalize it and make it work for you. All right, and this thing works 9 out of 10 times. If you see this, if it doesn't mitigate you, if it fails, it's fine. You leave it, but it has at least 50% win rate. If you trade this thing 10 times, those 10 times you see it, five of it will play to your advantage. It will work for you. It has a healthy positive expectancy. All right, I can show you this across different markets, different assets. This is volatility 50 indices. It doesn't happen every day. It doesn't happen every day, but if you can be patient enough, market a lot of patience. If you look, you see that there's a daily zone I'm still waiting for here. Okay, on the bigger picture, there's a zone I'm waiting for here because this zone broke this structure. So if a zone broke structure is valid, the price has not come here now does not mean, oh, we might still not react from there. All right, this zone broke this structure. So we have been stuck in this range. We've got into this high, got into this low, retested this high, retested this low. We've been doing all of this. Even inside of this range, we are still getting setups. So far, a zone breaks structure. Why we're able to get this setup is even though we are trading internal structures, this zone breaks structure. Because you might not be able to wait for price to come back to this high. And price might not necessarily come back to this high. Okay? You must be able to define valid zones for yourself. This is a valid zone. If price comes here, gives us confirmation, it's good. And you can see we have equal high liquidity. I marked it there. And here is equal low liquidity. So in this range, someday we are going to clear either we clear the high, mitigate here and continue to say, oh, we clear the low. But someday we're going to clear either this high or this low. We're going to get out of this range. But for now that we're in this range, if you look at it, you can clearly see that structure high, we are buying, we started selling, we started buying, we started selling. You're going to be trading it internally for now, breaking valid structures, even though it is internal, it's breaking valid structures. Okay, even though it is internal, it must break valid structures. But the one that even holds the most is the external. These ones are stronger. Okay, but it does not invalidate this internal. On the daily, on the higher time frame, internal structures can still hold. Where internal structures will fail you is when you trade it on a lower time frame, a time frame that is too low, it becomes fractal structures. It becomes fractal structures. But on a higher time frame, even the internal structures on a higher time frame can still hold and still play out. So this was how I was able to frame this trade. I had this setup, I had this zone marked out, but it mitigated and played out when I was not on the chart. Okay, and that is fine. You have to make do with it. You have to accept that you're not going to catch all your trades. You're going to miss some of your trades. You're going to miss some of your trades, and there's nothing wrong there. You are not a robot. You must not be on the market all the time. You cannot automate this. You cannot automate it. You can set price alerts. If price gets to your zone, it should notify you. Even if it notifies you and you're sleeping, now what are you going to do? All right, what are you going to do? There's nothing you can do. You will miss it. And once you've missed it, you've missed it. You wait for the next setup. And this setup was the setup I've been waiting for since how long? This zone cleared on the 26th. Today is what? Today is 4th July. So you could see over 10 days. Over 10 days I've been waiting for this setup and I missed it. But that does not invalidate the system. What we are going to do is we are going to, trade other assets, look for valid zones in other assets, mark our zones and trade other assets. Okay, that's why I always encourage you to have at least 3 to 4 assets that you are studying. People say newbies should just study one asset, but I encourage, even though you are just starting out, have at least 3 assets that you are studying. Don't just pour all your mind in one asset. As you're learning how to trade the asset, build your system, but have at least 3 assets that you are following, you are learning, you are studying their price action, you are studying their movement and all of that, so that you can always get your setups. Not daily, not necessarily trading daily, getting your setups every day, but in a week, you should be able to spot one setup, one value setup in either of all your assets. If you don't spot it on this asset, you can spot it on this asset, or you can spot it on it. So you can have one trade a week when you are trading 3 assets. But if you're trading one asset, you might not even get a trade for 3 weeks. Maybe the asset is still forming, the price action is still forming the setup. So this is my opinion, and I hope it helps you. Do have a great day. Do have a lovely day, and I wish you all the best. Keep winning, and I hope you are learning. So you can see this is the zone, this is the hourly trade, and also learn how to take your profit. Oh, this profit, I know some people want to trade it to this low, being that it confirmed entry on the hourly. You, because it's a daily zone, you want to trade it to the daily low. It's fine, but as an intraday trader, I want to get out of the market as soon as possible. And my lowest risk to reward ratio is 1:3. Once a setup gives me a valid trade idea that gives me a minimum of 1:3, I'm good. Anything extra, so I target for my take profit, I target the opposing structure. This is the opposing structure, this is the structure low before this price was mitigated. So I target here and I'm out. That does not mean I cannot hold all the way down, but I just want to get in, get out. So on the lower time frame, you could see that if you refine it, that's why I'm saying you can learn refined entry. If you refine it, even though you are still targeting this low, you are out on 1:9. You have refined this zone, refine the entry, refine the zone and everything. This is the highest level of refinement you can do for this trade. And then you are in 1:9. All right. This should be able to carry you. You are in, you are out of the trade. All right. Every other thing happening here is none of your business. You wait for this asset, this pair to give another valid setup for the next zone you are going to mark. If you trade like this, if you trade like this, you are going to make money from the market. You are going to make money from the market. This is a system I took time to build, back tested it, seen some profit with it. You just have to be patient, patient, patient. It doesn't happen every day. Like I said, have more than one asset you trade. 2 to 3 assets is fine. As time goes on, you can learn how to trade more and more assets, 5 assets, 6 assets, 7 assets, depending on if it respects your system. All right, but at least three assets you are trading should carry you, and that will be fine. All right. I wish you all the very best. Thank you for your time, and do have a great week ahead. Bye bye for now.